There are three simple things to look for if you want to find that next stock that has a good potential to make a strong upward move. This week I'm going to walk you through these three things. It's the culmination of the last 30, 35 years that I've been trading. It's a simple process based on a concept that I learned way back when I was in university studying finance, and we were looking at stocks that were trading on inside information. So here's the concept. When a company is going to go into a significant, strong upward trend, whether it's a day trade that's going to go up for an hour or a long-term trade that's going to go up for a year, they tend to start with a catalyst, something that gets the buyers enthusiastic, some aspect of significant fundamental change that warrants people to pay more. Now, when some investors, those who follow the company the closest, or those who read the news carefully, or those who have some inside information, when they have something of value, some knowledge that most of the market doesn't have, they'll go into the market and buy the stock aggressively. And in doing so, they will leave footprints for the rest of us to follow. The footprints are the stock will trade abnormally. And this is the first of the three criteria. We want to look for stocks that are making an abnormal price gain with abnormal volume. The second thing is we want the stock to break through a ceiling price, a resistance level. I'm going to show you a chart in just a moment and what I mean by this. Ideally, when we get the abnormal price gain with abnormal volume, breaking through resistance, it also should be after a period of low price volatility. And that one's a little tricky, so let me show you on a chart what I mean. This is a stock that's had a few big runs, and what we can see here is that this move right here started somewhere in there. And this latest move started maybe here or here. All right, so now let's go to our three rules. We want abnormal price action. That's abnormal price action right there. The price gain on that day was not normal. The volume on that day was also higher than the volume had been. And then the third thing, or actually the second thing, is that it broke through a ceiling price. So there was a ceiling price. The stock hadn't traded above that ever. Finally, we had low volatility. See how the stock was trading sideways in this sort of sideways quiet pattern? It's like a quiet room, and then the buyers come in aggressively, like someone yelling in a quiet room, and that started the big upward trend that saw the stock go from under $3 to about $10. And then it happened again. Abnormal volume and price, sideways trading through resistance, from low volatility through resistance with abnormal activity, and that started this next move to the upside. It's a very simple concept, and it's based on what makes a lot of sense. When there's significant fundamental change in a company, people are going to start to buy aggressively. As more and more people learn about that information, more and more buyers come in, and that's what sends the stock into an upward trend. You can use this concept if you're day trading, swing trading, position trading. I teach this and a whole lot more in the courses available at Stockscores.com and the memberships that we have. I provide indicators, I provide tools for searching, so you can go check my website, Stockscores.com, for more information about that. All right, let's get into this week's market analysis, and we'll jump to the Stockscores website and take a look at the charts. You can register for my free weekly email newsletter. I put stock picks and trading tips in there each week, so feel free to do that. Let's take a look at the S&P 500 chart. And this is the first one of concern because, as you can see, the upward trend line has been broken on the daily interval. Now, it has not been broken from a falling top. This is from a new high. So this could just be a pattern of topping out in the short term. If, however, we continue to move down, rise up, make a falling top, and then start to break down from a falling top, we could be setting up for a corrective phase either in August or September. If we look at the short-term chart, the 1 month time frame, you can see the fairly dramatic sell-off right here on Friday. All right, let's get into the NASDAQ 100. QQQ is the symbol. Very similar chart. You can see the daily chart is broken. If we go to the 3-year weekly, in the context of that weekly time frame, it's not a big deal. My concern is we're setting up for another one of these, which we had in the spring, and it's not quite the same because there we had sort of a double top. This is again a high basically at the top of the channel. So we're
Don't be surprised if we get a little bit of weakness, but it's not a cause for major concern yet. IWM is the small cap sector. Little more weakness in the IWM the last 3 or 4 days. And unlike the large cap sector charts, this has a falling top on the weekly time frame. So you can see the breakdown there. That could lead to more weakness in the weeks ahead. So we want to be careful with that. Now, a lot of that will be based on what the bond market does. And I'll show you the bond market chart in a moment. As well, I'm going to show you the trade of the week, which was a stock that made a big gain on Friday. So even though we have this weakness in the overall market, there are still stocks that make big gains. And the key to finding them is focusing on that abnormal activity, as we talked about at the top of the video. All right, let's move along to the Canadian market. T.XIU is the symbol for the TSX 60 ETF. It too had a little break of this upward trend line on Friday, but like those large cap US markets, it's coming off of a new high, not a major concern. Looking at the 3-year chart, you can see maybe we're a little overextended right now and need to correct downward over the next week or two, or maybe a few weeks, but it's not yet a major concern. Moving along to gold. Gold jumped on Friday, and it's in this ascending triangle pattern. So you can see that the volatility is compressing, and it may resolve with an upside breakout, particularly if we get more weakness in the market. Again, I wouldn't be a buyer of gold here. I think if you're in it, it's a hold. If we look at that 3-year chart, you can see just how far it has come. And it's been taking a break for the last 4 months or so. If we break out of this range, great. Otherwise, it remains a hold. Looking at oil, oil had some volatility this past week. You can see this little run up. Sorry, that's not the week or the daily chart. Let me look at the intraday charts, what I wanted to look at. So here is the break on Wednesday, Tuesday, Wednesday, then Thursday, Friday fell back. But that's an important signal on the short-term time frame. It may lead to a little bit more strength. The problem is we've got this very strong resistance here. Every time it gets up to this level, it gets stuck. And so even if we rally a little bit, we're probably going to get stuck at that price level. So oil, it's kind of a neutral chart right now, not particularly exciting or worrisome. All right, moving along, US dollar. Actually, let's take a look at silver, because a lot of you asked me to analyze silver, so let's do that. And silver had a little bit of weakness this week, but it's still in its upward trend. And if we look at the 3-year weekly chart, you can see that the trend is strong. It actually looks better than gold. And I think the trend's likely to continue. A little bit of a pullback would be healthy, bring it back to the trend line, and then hopefully bounce off of the trend line and resume that upward trend. All right, now let's take a look at the currencies. US dollar, which has been quite weak for many months, but it actually is starting to show a break of the downward trend line. There you see the downward trend line. We broke it this week from a little rising bottom. So it does look like the US dollar may be turning the corner. And looking at the 3-year chart, it makes sense that this would happen because we fall into this floor, which we've hit a number of times and then bounce. So we're breaking that long-term downward trend line. We need to build some rising bottoms before we get too optimistic about the US dollar, but it is making a step towards improvement. GBTC is the chart of the crypto ETF on Bitcoin. It broke down a little bit on Friday, but it's still in its upward trend, and so not particularly worrisome yet. Looking at that 3-year weekly chart, you see that the trend is still up, but we may get a little bit of weakness in the short term. And then finally, the bond market chart. So this is an important one because, of course, everybody wants to see interest rates drop. If this goes up, that means interest rates are going down in the bond market. So we had a little bit of a gain the last week or two, still in the context of this long-term chart, not particularly strong, but we have broken up from a rising bottom. So the bond market a little bit better, but by no means a great looking chart. So my ratings then, you'll see a lot of blue here this week. I made a lot of changes. Stock markets generally lower to neutral, with the short-term outlook on small caps actually a bearish. But again, the best trades come from the small cap market, the alpha stocks, those stocks trading abnormal volume. And there are still those stocks every day. So even though the outlook in general for small caps is not great, there's still good opportunities in that market. Canadian stocks neutral, gold, oil neutral in both timeframes, US dollar neutral in both timeframes. Only thing that's bullish is the long-term outlook for Bitcoin, but neutral in the short term, and then bonds neutral on both timeframes. All right, here is the trade of the week, and this is an example of a stock that even on a down day on Friday still made considerable gains. This is a low float, low market cap stock. It started to behave abnormally in the pre-market. You see those pink and yellow dots there. That is my action candle indicator. I don't like to chase strength, so I don't want to be a buyer of things like this. I want to be a buyer of pullback. So there's a pullback, and here was a pullback break, and that led to this move, and of course this move. And those moves on percentage basis are, 100%. This is, roughly 50 cents to $1, and this one 80 cents to $1.27, a 50% move there. So these small cap, micro cap stocks that are very liquid, and I have to say that is important, very actively traded, very abnormal, and making these breaks from pullbacks or breaks from low volatility as we had right here, that's the key. And in this market, that's a good place to be making money. You can learn more about how I do that at stockscores.com. Just look up the trade or training section on the website. All right, I will leave it at that. Hope you've enjoyed it. And if so, please click on the like button. If you're not subscribed to the channel already, make sure you click on that subscribe link. And as always, trade well.